Hello traders, welcome to the very first video of chapter 1. Our first video for chapter 1 is the algorithm. Alright? So, why do you think the market moves the way it does? Why do you think the market moves that way? Why is the market going up? Why is the market going down suddenly? Do you think this is all just buying and selling pressure? Do you think all of these are made by retail traders, random people just like me and you? Do you think this market movement are made by these big traders? Let's say 10,000 group of traders that are trading together. Do you think that's the reason why the market is moving? Absolutely not. Absolutely not. Alright, so I will teach you. I will open your eyes to why the market is behaving this way. Why the market is going down before going up. Why the market is going to this fair value gap and not to this fair value gap. Alright? So, for this example, as we can see, we have a very good, very decent price action. Alright, so it doesn't matter what pair are you trading, what market are you trading, the market are all the same. Alright, they have all run by algorithm. Alright, the market is not random at all. For this example, alright, let's see if you can spot any strange behavior in this price action. Right? So before I will reveal you, let's look at the charts first. Alright? So try to figure out if there's something strange in this price action. Alright? If it's moving relatively normal or not. So do you think price action is really random? Right? So here, I will reveal it to you. Behold, I will open your eyes. The markets are 100% manipulated. Alright, so the markets are 100% manipulated. It's not buying and selling pressure. It's not demand and supply. It's not because all of that. It's controlled 100% by the whales, by the smart money, by the market makers. Alright, so here we are back on the charts, right? Like I told you, if you can spot any strange behavior in this price action. So I will reveal it to you now. As you can see right here, before we are going up, right? We have bullish price action and order flow. And now we have been bearish. We have now reversed. As we can see, the price action is going down. Then we retraced into that fair value gap right here. As we can see, right? We respected that inverse fair value gap right here. The price respecting that, then we have go lower. But the price has went up, taking out that liquidity right here. After taking out that liquidity, the price has now continued lower. That is 100% manipulation, right? Once again, price is going down. We are bearish. Then the price has went up, right? Since we are bearish, we should be going down. right? But no, we have manipulation right here. These are made 100% by the market makers, the smart money, the big banks. Alright? This is a big manipulation. Right here also, as we can see, we have been bearish, we are going down, then the price has went up first, taking out that equal high, and then eventually going lower. As we can see, the price action is not random, alright? It has a certain market movement. It is run by algorithm. Once again here, price went up, then retraced lower, then it has taken out this swing high before eventually going lower. Alright, so for now, maybe you can't understand this yet. Maybe you are having a very hard time understanding this, but rest assured, I will teach you exactly how to catch these moves. Alright, I will teach you in this mentorship exactly how to anticipate this manipulation right here and how we are going to capitalize in that movement. Alright, so here is another example. Alright, so as you can see, we have been bearish right here. So before I will reveal this to you, inspect the price action first. Alright, so check it out for yourself. Let your eyes see if you can see any strange behavior in the price action. Alright? Take your time, I will give you a few more seconds. Check if you can see any strange price action. If the market is really random, just like they say. Alright, so I will reveal it now to you. As we can see right here, we have taken out these equal lows before going higher, right? Another one right here. We have now shifted bullish right here, but price has decided to go down lower first before going out, alright? Before going up. Price has decided to take out this liquidity first before going up. Isn't that strange? Why is the price going down first before going up? Can the price just move up already without going down, right? Also another, we have here the price once again go down before going higher. See, it's a repeating phenomenon, right? These are all manipulation. These are all made by the market makers. These are all made by the smart money. The algorithm is run by the big banks, smart money, market makers, right? These are all manipulation. As we can see right here, going up, we have made a lot of equal lows right here, right? So there's a lot of traders looking for a support right here, right? There's a lot of support. They think there's a lot of support right there, that this is a strong support. But we can see this swing low has taken out this swing low. As we can see, price has went down first before eventually going higher. As we can see, it has retraced lower before continue going up. Alright, so this is the algorithm. Alright, so what is the algorithm? Just like I told you, it is run by the market makers, the smart money, the big banks. Alright, the job of the algorithm is to engineer liquidity. Right? Its job is to engineer liquidity. So, what do you mean by that? Just like I told you, it's creating some kind of equal lows or equal highs for traders to determine a support and resistance. Alright, so the algorithm is also programmed based on human emotions. Alright, so for example, the market is overall bullish. So, of course, humans are expecting the price to go higher because it's bullish, right? But then, price eventually is going down. So, why would humans buy if the price is going down, right? That's the manipulation of the markets. Just like I explained to you, right? If the price is bullish, the market is going down first. If the market is bearish, the market is going up first before going down. That's how the algorithm manipulates human emotions. The liquidity, of course, are the retail traders, the retail money. And who is that? That is us. This is us, the retail money. All of the people, all of the traders, all of the small companies, small banks that are trading, they are the liquidity. We are the liquidity. We are being manipulated. The markets are based on us. They for us. Alright? So, this is what the algorithm only do. The algorithm only seeks one of two things. It's imbalance and liquidity. There's nothing more. Number one is imbalance and number two is liquidity. Alright, so this is what the market always do. It looks to balance price action, alright? It's looking to balance price action and is always looking for liquidity. Alright, so for this example, the market is looking for imbalance, right? So the algorithm is looking for imbalance. So what do you mean by imbalance? Imbalance are inefficiencies in the price action. It's the fair value gaps, it's the volume imbalance, and the new week opening gaps, new day opening gaps, all of those imbalances. Alright, so as we can see right here, we have this imbalance right here. These are imbalances in the market. This one, we have fair value gap right here. Another fair value gap right here. We have fair value gap right here. These are all fair value gaps. These are all imbalances. And the market, the price, the algorithm, the market makers are all seeking always to balance the price action. What do you mean by seek to balance price action? Alright, so the algorithm balances the price action by means of engineering liquidity. So, as we can see right here, you have going down. Then we create imbalance. That imbalance will for sure be rebalanced later on in the price action. And as we can see right here, price has filled that imbalance and has now been rebalanced. Alright, so remember that the price, the algorithm is always trying to give a balanced price action for both buyers and sellers. That is what the market always do. Give chance to both buyer and sellers. By how? By creating liquidity, by engineering liquidity. Alright? So let's see. As you can see right here, we have this imbalance right here. Price go back into that inefficiency, and now it has gone lower. As we can see here also, we have an imbalance right here. Price went back into that imbalance to fill the gap, and now it has gone lower. As we can see right here, we have another fair value gap. Price has retraced back higher to fill that fair value gap and has now gone lower. Alright, so the price is always offering fair value in the market. So why is that necessary? Alright, so for example, we are bullish. We can't just go higher and higher and higher without retracement. That is not a fair market. Then, if that's the case, everyone will be rich, alright? Every single one of us will be now rich because we'll just buy in the low of the market and the market will just go up, alright? So, there are retracement in the market. That is normal. That is to provide fair value in the market, right? You can see right here another imbalance. The market filled that imbalance and has now gone higher. We have another imbalance right here. Price is going up. The price went back and touched that fair value gap, full refill for that fair value gap before going higher. As we can see right here also, look at that precision. Look at that. We feel that imbalance right into the tick, right? That is full fill. That is the algorithm seeking to balance price action. Alright, so now we have gone higher also. We created a balance right here and the price action has balanced it and has now gone higher. As you can see here also, we have an imbalance right here and imbalance right here, and both of that imbalance has been rebalanced by the algorithm. This is the second thing that the algorithm seeks in the price action, alright? So it only do one of two things, alright? That is to rebalance and to take out a liquidity. Alright, so this is the same chart. This is the same price action earlier for the imbalance. Alright, so try to see once again where the market is taking out liquidity. Alright, so remember always, the market always seeks one of two things. It's either imbalance or liquidity. It's always looking to rebalance something or take out a liquidity. That's the market always do, alright? Remember that. Rebalance or take out a liquidity. Alright, so as we can see here, we have taken out a liquidity. We have swing high right here. The prices went up first before going down. Here we have buy side liquidity. If you don't know what buy side liquidity is, don't worry, I will explain it full in this mentorship. Alright, so the prices went up first before going down. As we can see here, we have sell side light here. We have taken out that swing low. Alright, so this all swing low, swing high, equal lows, equal highs, those are all liquidity. Alright, so those are all liquidity. Don't worry, I will explain more about liquidity. I will have a separate video in depth about liquidity. How to spot liquidity, where to wait, manipulation for the liquidity, all of that. Right, so as we can see here also, price is going down. We have taken out this swing low also. This is liquidity. Always remember, there are liquidities in old highs, old lows, equal highs, equal lows, trend line, all of the trend line. Alright, so here also we have swing low, price is taken out. Now we have shifted higher. We are now looking for buy side liquidity. Price has now taken out this buy side liquidity and has now shifted higher. Now it has retraced lower, filling out this imbalance and has now gone higher. It's now seeking for more buy-side liquidity higher. That's all the price do. Balance and liquidity. Always remember that, right? Right here we have taken out this equal high and then it retraced lower. Then another, we took out this swing high right again and now it has retraced lower. Now we took out this swing high right once again and now it has retraced lower into this imbalance. That's what the price always do, alright? Remember that. Take out this equal highs, retracement. Take out this equal highs, retracement. Take out this equal highs, retracement. Alright, so that's what the market always do. Take out liquidity, imbalance. Take out liquidity, imbalance. Alright, so I need you to remember this. Alright, so this is the key to this market. Alright, if you saw that the price has rebalanced something, it means that now it's going for a liquidity. That's it. Now, for example, the price has taken out a swing low or a liquidity. Where do you think the price is now going? Yes, to an imbalance. For example, right here. Right? We have taken out a swing low right here. Now it has gone up higher, right? So now here we have taken out a liquidity. So what do you think the price will now do? Yes, rebalance. Now once again here we have taken out a swing high right here. What do you think the price will now do? Yes, rebalance. That's what the market always do, right? Always remember that. Alright, so this is just the tip of the iceberg. Alright, we're so far away. But I know maybe you are having a very hard time understanding this. But you can watch this video as many times as you want, as many times as you need. You can take your time, alright? This course, this whole package, this course that you availed, this is for a lifetime. You will have full access of it for a lifetime. Alright, so this is just the tip of the iceberg. We're just starting out. Alright, so don't worry. I will try to keep it slow. I will try to explain everything in as simple as possible. Alright. There's still a lot to uncover. We're just beginning. Don't worry, I got you. Alright, so you just need to always take notes, right? I forgot, you should always have a pen and paper with you while watching this video, right? That is very important to take down notes, alright? So if you have if this clicks in your head, write it down. If this is something that has given you a light bulb, write it down. Everything that you learned, write it down, alright? So you need to write down notes. There's a lot still to uncover. Alright, so that's it for our very first video for the chapter 1. Alright, so take as much time as you need. Take your time. You can watch this as many times as you want, as many times as you need. Alright, so I'll see you on the next video.